The RBI Governor Sanjay Malhotra on Wednesday said that the Monetary Policy Committee has unanimously decided to reduce the policy rate by 25 basis points from 6.25% earlier to 6% now. Hello, my name is Abhinav and you're watching Mint Explains. Now, early in February, the RBI's 6-member MPC had announced its first rate cut since May of 2020 amid a slowdown in the economy. All this is happening when the US has imposed a 26% tariff on India's imports. And this is expected to reduce India's GDP growth for FY 25-26 by 20 to 40 basis points, potentially lowering our growth percentage from 6.1% from the RBI's earlier forecast of 6.7%. Now, experts are of the view that this is one of the key reasons why the RBI has decided to further cut rates, Donald Trump's tariffs, as it will help counter economic strain.
Higher tariffs shall have a negative impact on net exports. There are, however, I may say, several known unknowns. The impact of relative tariffs. Our relative tariffs vis-a-vis some of the other countries are quite low. Then there is the unknown of the elasticities of our export and import demand and the policy measures adopted by us. You are all aware that India is very vigorously and proactively engaging with the US administration.
Now, overall, with inflation under control and external risks rising from geopolitical tensions to potential trade disruptions, experts believe that the RBI will likely continue on this easing path throughout the year 2025. People in the banking industry feel that the accommodative shift strongly suggests further easing, expectations of further rate cut. The scale and pace, though, of the cuts will be shaped by how global economic uncertainties unfold. As India positions itself for long-term growth amid short-term volatility, monetary policy appears poised to take center stage in driving economic resilience. Now, how do both of these factors impact you and your life personally? Let's start with the RBI first. Well, cheaper loans for sure. Auto loan, home loan, education loan in case you have floating interest rates. We've also seen how banks and NBFCs are gradually reducing their FD interest rates. In fact, India's BFSI sector, in hope of a rate cut, has been an FPI favorite. FPIs have poured 17,585 crore rupees into the financial services equities in the last 2 weeks of March. You heard that right. Now, RBI's rate cut in this scenario will act as a cushion against Trump's tariffs. Not only that, in an era of big credit growth India is going through, this will encourage a lot of borrowers to take secure loans or loans against collateral from registered BFSI companies instead of loan sharks. But let's come to Trump's tariffs, ladies and gentlemen. Trump's tariffs have led to problems for some sectors which have exposure to the US in India. India exported goods worth $89.81 billion to the US in 2024. According to the think tank GTRI, significant export losses are likely in several key sectors. Exports of fish are projected to decline by 20.2%, iron or steel articles by 18%, gold, jewelry and diamonds by 15.3%, vehicles and auto parts by 12.1%, and electronic, telecom and electrical products by 12%. Other categories such as plastics, carpets, petroleum products, organic chemicals and machinery are also likely to be hit. Meanwhile, steel, aluminium, automobiles and auto parts, which account for $2.2 billion or 2.5% of Indian exports to the US, will now face a 25% tariff. Therefore, in case your company in any sector, if it's dependent on the US for its revenue, well, the situation can turn a little grim in the near future. In a nutshell, relatively cheaper loans for you, but a sensitive job market in case your sector or your company is dependent on the United States or the US dollar. This is an interesting space, ladies and gentlemen, and we at Mint shall keep you posted with all the latest developments.